All right, let's dive into Chicago commercial real estate today. You sent over some interesting stuff, especially that article from Michael Linton and the Chicago Deal Flow team. I mean, that's chicagodealflow.com for anyone listening. Michael's been a broker in Chicago forever, like almost 40 years, so I feel like we're getting some insider info here.
Definitely. And you know what's funny? There's this weird contradiction happening right now, at least according to this ICE Mortgage Monitor report that just came out, the November one.
A contradiction, huh? Now you have to tell me more.
Well, basically, it says homeowners across the U.S. are sitting on this huge pile of equity. Like we're talking $17.2 trillion. And get this, $11.2 trillion of that is tappable.
Okay, slow down for a sec. My brain's trying to catch up. $11.2 trillion. That's like everyone in Chicago suddenly winning the lottery all at the same time. So this tappable equity thing, is that what we're saying could fuel commercial real estate?
Exactly. Think about it. Let's say you're a homeowner. Let's say in Oak Park, and you've got a nice chunk of equity just sitting there. You might start thinking, hey, maybe I could use some of this to invest in a commercial property.
I mean, who wouldn't think that? A storefront on Lake Street, a cool office space in the West Loop. So many options.
But here comes the catch, the contradiction the report talks about. Even though people have all this money they could invest, they're not exactly rushing to do it.
I get it. Interest rates are scary high these days. My own mortgage rate jumped last year. It was painful to see.
It makes sense, right? If you're a business owner in Logan Square needing a loan to, I don't know, fix up your space, those monthly payments are going to be way higher than a couple years ago. Suddenly, that investment doesn't look so appealing.
So it's like all this money's just stuck, frozen because borrowing is so expensive. That's got to have some effect on the whole market.
It does, big time. Upgrades slow down, new businesses hesitate to open, everything feels it.
Not a good sign.
Yeah.
But wait, didn't that report say something about the Midwest specifically?
Yeah, it did. While other areas are seeing home values go up and down, the Midwest is pretty stable, steady growth.
Interesting. So is Chicago kind of going its own way then? Is that good, bad? What does it mean for commercial real estate here?
That's where things get really interesting. This stability we've got, it could actually make Chicago commercial property even more attractive to investors. When other places are unpredictable, Chicago's steady market starts to look like a safe bet.
So it's like everything's crazy out there, but at least Chicago makes sense.
Exactly. Investors might be more willing to deal with small issues if they think the long-term outlook for Chicago is good.
Okay, that makes sense. But are there any specific areas in Chicago that have the best potential? The report mentioned a couple suburbs, right?
It did, Schaumburg and Hoffman Estates specifically. The report thinks they might see a lot more commercial activity, especially if things cool down a bit in the residential market there.
Interesting. So big picture, things are kind of shaky nationally.
Yeah.
But Chicago seems to be holding its own, maybe even doing well in some spots. And that's where I think Michael Linton's perspective is so helpful. He's not talking about real estate everywhere. He's all about Chicago, right?
Exactly. And he's got some really interesting strategies for navigating this specific market.
All right, I'm all ears. What does Michael suggest people do if they want to get into Chicago commercial real estate right now?
Well, on chicagodealflow.com, he lays out three main strategies. The first one he calls the covered land play.
Okay, covered land play. That sounds intriguing. Tell me more.
Basically, imagine you buy a property in a great spot, could even be downtown Chicago. But the building itself, it's not being used to its full potential. Maybe it's bringing in some money, but the real value is the land. You hold on to that and wait for the perfect moment to build something bigger and better.
So it's all about playing the long game, betting on future development.
Exactly. It takes patience, vision, but it can really pay off in a market like Chicago, where some areas are just waiting to be transformed.
I love it. What's the second strategy he talks about?
That would be distressed commercial REOs, which stands for real estate owned. These are properties that have been foreclosed on and are now owned by, a bank or a lender.
Got it. So you're basically looking for properties that have hit a rough patch and are being sold off.
Exactly. And that ICE report, remember, it mentioned rising delinquency rates, which means we could see more of these REOs hitting the market. Could be a good opportunity for investors to get a property at a discount.
Sounds like finding a hidden gem, fixing it up, and watching its value go way up. But I bet it takes a certain type of investor, someone who isn't afraid of a little risk, right?
You're right. Not every property is a diamond in the rough. You got to know what you're doing. For example, buying a struggling retail property just because it's cheap might not be the best move, especially with everyone shopping online now.
But on the other hand, an office building in a prime location, maybe it's struggling because of a temporary downturn in some industry. That could be a real steal.
That's the kind of thinking that separates the good investors from the rest. Now let's talk about Michael's third strategy, creative financing.
Yeah, with interest rates as high as they are, you got to get creative. What exactly does he mean by that?
Let's say you find an amazing opportunity in Hoffman Estates, a small industrial building perfect for expanding, but getting a regular bank loan right now feels impossible with these interest rates.
That's where the creative part comes in, right?
Exactly. You could try something like seller financing, where the seller of the property actually becomes the lender.
Oh, interesting. So the seller gets steady income and the buyer avoids those crazy bank interest rates and all the hassle.
It can be a win-win. Or another option is a joint venture. You partner up with another investor and tackle the project together.
Strength in numbers, I like it, especially for bigger, more complex projects.
Right. It's all about finding the strategy that fits the situation, and that's where someone like Michael Linton can be so valuable. He knows how to make the most of any deal, navigate all the complexities.
Like having a guide in the jungle of Chicago real estate. Someone who knows all the shortcuts and how to avoid the pitfalls. Okay, so we've got these three strategies. Covered land play, distressed commercial REOs, and creative financing. I'm starting to realize that Chicago's market is more complicated than it looks at first glance.
It definitely is. And that's why having someone like Michael, who's been doing this for years, can be such a huge advantage.
Totally agree. But before we go any further, let's bring our listener back into the conversation. We've thrown a lot of info at you, but what's really standing out so far, what are you thinking, I need to know more about that?
Is it the long-term potential of the covered land play? The treasure hunt aspect of distressed commercial REOs? Or maybe the flexibility of creative financing?
Hold on to that thought, because when we come back, we're going to dive deeper into these strategies and how they could work in your part of Chicago. Don't go anywhere.
All right, welcome back to our Chicago real estate deep dive. We were just talking about those three strategies Michael Linton lays out, on chicagodealflow.com, ways to make smart moves in this market.
Yeah, the covered land play, that long game approach, and then those distressed commercial REOs, almost like bargain hunting for properties.
And of course, we can't forget creative financing. Got to think outside the box with interest rates being what they are these days.
What I'm really curious about, though, is how these strategies actually work in different parts of Chicago, like those suburbs the report mentioned, Schaumburg and Hoffman Estates.
Right. Okay. Let's say, just hypothetically, you're interested in Schaumburg. Imagine you find a property there. Maybe it's a small retail space, nothing fancy, but it's on a big lot right off a major road. That's where the covered land play could come in.
I see what you're saying. You could keep the retail going, bring in some income, but the real prize is that land, just waiting for the right moment to turn it into something much bigger.
Right. Exactly. And Schaumburg's got a lot going for it. Good demographics, businesses like it there. Perfect for a big development project. You could turn that property into, I don't know, a mixed-use building, retail on the bottom, apartments on top, something like that.
No, that's thinking big. Okay, let's shift gears for a minute. Talk about those distressed properties, the REOs. Where would someone even start looking for those in Chicago?
Well, anywhere that's seeing some, economic changes, you might find more distressed properties. But here's the thing. It's not just about finding a cheap property. You got to dig deeper. Got to figure out why it's distressed in the first place.
Like buying a used car, right?
Yeah.
Low price is tempting, but got to make sure the engine's not going to fall out.
Exactly. A retail property that's struggling because of online shopping, that might be a risky investment, even if it's cheap.
But an office building in a great spot, maybe it's just having a tough time because of some temporary issue. That could be a real opportunity.
That's the kind of strategic thinking that really matters. Okay, what about creative financing? How does that actually work?
Yeah, give me an example. How could someone use creative financing in this crazy interest rate environment we're in?
Okay, let's say you find an amazing property in Hoffman Estates, maybe a small industrial building with lots of room to grow. But getting a bank loan right now, forget about it. With these interest rates, it'd be a nightmare.
Time for some creative financing magic, right?
You got it. You could talk to the seller about, seller financing. Instead of going to a bank, the seller becomes the lender.
So the seller gets a steady income, and the buyer avoids those sky-high bank interest rates. Everyone wins.
It can work out really well. Or there's the joint venture option, team up with another investor and share the project.
Strength in numbers makes sense, especially for a big project that needs more money than one person has.
Exactly. Finding the right strategy for the right opportunity, and that's where Michael Linton's expertise really shines.
It seems like his website, chicagodealflow.com, is like a treasure map for anyone serious about Chicago real estate.
It really is. He's not giving out generic advice. He's focused on Chicago specifically. The neighborhoods, the trends, everything.
It's like he's saying, I know this market inside and out. I'll help you navigate it so you don't get lost. Now, before we move on, I want to check in with our listener again. We've covered a lot, but what's really sticking with you? What are you thinking about?
Which one of Michael's strategies has caught your attention the most? And how do you think that strategy could work in the specific part of Chicago you're interested in?
We'll be back in a minute. To wrap up our deep dive, we've got some final thoughts to share. And we're back for the final part of our Chicago real estate deep dive. We've talked about the ICE report, those trends, and of course, Michael Linton's 3 big strategies from ChicagoDealFlow.com.
Yeah, we've covered the what the strategies actually are, but now I think it's time to talk about the why. Why should our listener care about all this? What's the takeaway?
Exactly, because knowing about these strategies is one thing, but knowing how to actually use them is what really matters.
So imagine you're listening to this and you've been thinking about, I don't know, getting into Chicago real estate. Maybe you just sold your business or you're looking for a new way to invest your money.
This deep dive is like a crash course in how to be smart about this market, even with things being kind of shaky at the national level.
Right, because Chicago's different. It's got its own thing going on. You can't just follow national trends. You got to understand what's happening here specifically.
And that's where Michael Linton comes in. He's been doing this in Chicago for years. He knows this market inside and out. He's not just giving general real estate advice. He's giving you the Chicago perspective.
He's showing you what not to do and what has worked for him and his clients.
It's like having a secret weapon, a cheat sheet for Chicago real estate.
And the best part, he shares it all on ChicagoDealFlow.com. He's always updating it with new info, market observations, examples of what's working.
It's a gold mine for anyone who's serious about investing in Chicago real estate.
So as we wrap up this deep dive, I want to leave you with one question. Which of those 3 strategies, the covered land play, the distressed commercial REOs, or creative financing, which one really speaks to you?
And think about how that strategy could fit into the specific part of Chicago you're interested in. Is it downtown with all the energy and excitement? Or maybe Schaumburg, Hoffman Estates, those growing suburbs? Or maybe you're looking for a hidden gem in a neighborhood that's just starting to take off.
Your answer to that question will tell you a lot about what kind of investor you are, what your goals are, how much risk you're comfortable with.
So take some time to think about what we've talked about today. Let it sink in. And remember, knowledge is power, especially in real estate. A smart approach plus the right information. That's how you succeed.
Your Chicago real estate journey is just beginning. Good luck out there.